Hello guys, welcome to today's trade recap. So this was the trade I took yesterday. So I'm going to be breaking down the counter trade and pro trade I took yesterday. A very wonderful, beautiful trade. But before we dive down to the main video, please, I want you to kindly subscribe to my channel. Please, and double please. I'm working on getting my channel to 1k subscribers. Once I get to 1k subscribers, I'm going to be dropping my signal group where I will be dropping all my charts for the day for you guys, so that you see how I analyze my trade every day. I'm also going to be taking 1 or 2 people and training them on how to trade the SMC trading strategy. So please kindly help me to get to 1k subscribers, and don't forget to share this video to your friends if you love it. So let's quickly dive into the main video so that I will show you guys the 2 beautiful trades I took yesterday. It was very nice. That's why I want to break it down for you guys. I want to show you guys how to trade counter trend, the best way to trade counter trend. Now, before we quickly dive into the main video, I want you guys to know that it's not like I take counter trend all the time. It's just like the one I saw yesterday was too good, was too beautiful for me to leave. Alright, and one thing again, one rule I follow when I'm trading counter trend is to take profit immediately it gets to any supply or demand zone. So I don't allow it to ride the way I allow pro trend to ride. Alright, so I'll be showing you the counter trend I took yesterday, and I'll also be showing you the pro trend I took yesterday. So let's quickly dive into the video. Now, first thing I do when I get into the market is my top-down analysis. It's very important, very important. So yesterday I checked my 4 hours, and you can see that the market was going down. All right, you can see the market was going down. We are still on a downtrend. All right, so I go back, I went down to 1 hour to see if I can see a proper range, because you know I trade range. If you see my trading plan here, you know that I trade range. On the 1 minute, I was already seeing a very beautiful range. Already the market is going down, but I went down to 30 minutes so that I can see a very proper range. Do you understand? When I come to the 30 minutes time frame, I now saw some of the trade I took yesterday and the POI I marked day before yesterday before going to bed. So when I come to trade yesterday, I now see that that particular point have been tested. So I now went down to 30 minutes time frame to look for a very significant point of interest and a good proper range. Now when I went down to 30 minutes time frame, I now realized that this thing have broken structure here. Alright, and you know what the market does? Once it breaks structure, my market keep moving in a range form, that is order flow. It will go like this, tests, like it will break structure, now went back, test something and keep going, break structure, now retest, mitigate something and keep going, following the market order. That is what they call order flow. The market keep going. This is what they call range. This is a range. The whole of this place like this, the whole of this place like this is a range. So the market, this is how the market move, and this is what they call order flow. Once you know how to use order flow, you see that you always catch a good trade, and it will reduce the amount of loss you take every day. So you see the market move like this, form a range, retested, pulled back, and keep on going to the market direction. That's how it keep on doing. So when I entered the market yesterday, I now realized that the markets have broken a structure. So what do you expect? Once a market broke a structure, it will come back to test something, mitigate something, and keep going to the market direction. Alright, so look at what happened yesterday. When I entered the market, and I realized that it have broken a structure, I say, okay, what I'm anticipating is that this market will move back. Alright, so what I did yesterday was like, while I was waiting for the trade to come in, this was the first POI I marked yesterday on 1 hour time frame. Alright, so and I came to the 30 minutes time frame and I saw this time frame, and you know how I trade, I always make sure that there is a liquidity feeding into the POI I want to trade. That's what I use to further confirm each and every POI I'm trying to trade from. So you see that even though this 30 minutes POI is feeding into this 1 hour POI based on my strategy, I said no, I am not supposed to predict the market. No, these two POI, they all met my trading plan. What I now have to do is to mark two of them. Any of them in these two, wherever place I see my choke, that is my change of structure, that's the place I'm going to trade from. So even if I see a change of structure here and I trade it and it didn't go through, it is fine. I will wait and trade from here. So I marked it and put my alarm there. But there was another thing that was happening in the market yesterday, because I know quite alright that once the market breaks something, there's definitely going to be an opportunity to take a counter trend to this, either this first POI or the second one. So I now went down to 5 minutes to look for any entry on this particular, because I believe that the market is going to pull back to this, either of this my POI. So I now went down to 15 minutes to look for a place to trade from. Alright, when I got to 15 minutes yesterday, there was nothing clear for me to trade from. Remember, the market started here. This is 8 o'clock. You see this tiny line, that's 8 o'clock. So what I did was go down further. Alright, I went down to 5 minutes to look for a very clean stuff. Alright, so when I got down to 5 minutes, what did I see? I saw that the market have formed a very clean change of structure. Do you understand? Very clean change of structure. So you can see that the market cleared liquidity here, went up, cleared something, went down with a very long wick. Do you understand? With a very long wick. Now went up and break this thing again. Another change of structure, went down and retested it. This all happened before I entered the market, so I'm not bothered about it. So when I entered the market, I now started looking for opportunity after seeing what have happened already. So I just come here, marked this place. You can see this long wick, it have not been mitigated, so I marked it. I was waiting for something, a clean stuff to happen. So I marked this this 5 minutes time frame long wick. Alright, I did not, to be honest, I did not trade from here. I did not trade from here because I've told myself that I'm not going to be taking any trade. I'm not going to be taking any trade until it is 8 o'clock. 8 o'clock dot, then I can take any position. So what did I do? After marking this place, when the market mitigated here, I went down to the 1 minute time frame. Before I did that, I already mapped out this place. Can you see it? I already mapped out this place. Alright, I already mapped out this place. The market went up, broke this BOS. It now gave me a more confidence that this thing was going to play out. When the market broke this structure, it now gives me a further more confirmation that this trade is going to play out. What did I do? I now mapped out this place, and immediately it was 8 o'clock. What did I do? I went down to 1 minute to look for a very good clear entry. I hope you guys are following. Of course, I know you are following. So I went down to 1 minute to look for a very clean entry. Did you see? This is the 5 minutes POI. So I took it back. Look at what happened in that 5 minutes POI. Just take a look at what happened. You see, this particular POI tested something on 5 minute POI. I marked it before. Did you see this POI now? This 1 minute POI. Look at what is happening there. Let's break it down. You see that it's cleared liquidity down here. Do you understand? There's another. Look at liquidity feeding into the POI. Remember what I told you about liquidity feeding into POI, any POI that I want to take trade on, and it broke structure. Have you seen a trade stuff now that further confirmed that this is a good place to take this trade. There is a liquidity there. It cleared something, it cleared liquidity here. There was a buy before a sell, then before a buy that now finally moved. Do you understand? Now there's another retest. Do you understand? But I actually took the trade once it was 8 o'clock. Do you understand? When it went up, broke this structure, I said, okay, this is a good time because this is a 5 minutes change of structure. It came back, it retested, it broke structure. So this place is a good place to take this trade. And there's a liquidity feeding into the POI I want to trade from. So what did I do? I went back, I set my, there's something I used to do that let me show you guys. So before I take any trade, I used to use this. It don't work most times, but it works very well. You understand? I used to use this thing to take the 75% of it. Do you understand? So I set my trade, and immediately it was 8 o'clock. It tested it, and before I could come here, I already got my 5R because this trade I took 5R on this trade. Why did I do that? Since I was targeting this place, I wanted to take something before it gets here because this is a counter trend. Normally on a normal day, what I used to take is 10R, but no. Why I took 5R is that counter trend, it can get here, just here. You don't know that it have tested something somewhere here and it start going down. So I just targeted 5R. I just targeted 5R yesterday and took this 5R. So it's a very beautiful trade. So that is how you take counter trend. Now let's go back to the main thing of yesterday. That is the pro trend trade I catch yesterday. So 30 minutes time frame as usual. I've showed you guys the 30 minutes time frame. All I just did is wait for the market to get to that my POI, which is the first thing you do is look at, let me explain this my market my trading plan for you guys. The first thing you do is you wait for the market to get to your higher time frame POI, which the markets have done. Now when the market get to your higher time frame POI, what did you do? You wait for 3 things. Number one is you wait for the market to break structure or clear liquidity from the left. Then you wait for the market to form a change of structure, that is CHOCH, which is here. Now any POI that I want to trade, you have to make sure that there is a liquidity feeding into that POI. All right, this is to further another confirmation to make sure you are taking trade from the right POI. In the market, there is always a lot of POI, but the only way to stay in the right direction, the only way to further take the best trade, is to give yourself some rules, back test it, so that even if you are entering a trade, you make sure that this trade meets all your trading plan. All right, so look at the first trade I took yesterday. So the markets, after forming this change of structure, went down, formed this trade. You know, sometimes somebody can make mistake. All right, so what did I tell myself yesterday? I said, okay, since even this trade formed a tiny change of structure, which wasn't nice, I'm not supposed to be taking this trade. I told myself, okay, I was going to take this trade, but I'm going to break even. All right, I broke even at this point. All right, but I told myself that this particular place is actually a liquidity feeding to this POI. This place is a liquidity. So remember what I told you guys yesterday. I said there are some places I am willing to take the risk. So I'm willing to take the risk here and here. Do you understand? So what did I do? When I entered the market yesterday, I set my trade here and also set another trade here. I told myself that even if this one fell, that I'm willing to catch it here. Do you understand? So this is more like a liquidity feeding into this main POI. So I set my trade. Remember, once I'm on the pro trend, I don't used to take 5R. I used to take my full TP. So I set this trade up, and when it got here, I immediately broke even. All right, so what did I get? And I said this trade immediately. I said this trade. So what happened? It kicked me out, entered this my trade, and went down. All right, so look at my 10 hour, guys. So immediately it cleared here. Immediately I broke this structure yesterday. Immediately it broke this structure. Immediately it broke this place, this particular place. I set it at break even, and the market never come back to kick me out. So what happened, guys? Look at what happened. And remember, this was London section. I took my 10 hour. I don't like being greedy. I took my 10 hour. And yesterday I actually allowed something to run. I took my 10 hour and allowed something to run. So let me show you guys another trade opportunity yesterday, but I didn't take it. I didn't take it. All right. Look at, when he entered here, it came back, broke this structure. Let me show you guys something. But I did not take it, because most time what I do is that once I place my trade, I close the chart. I set where it will broke even. Once it passed that place, it broke even. What did I do? I just leave the chart. Is either it get to my take profit, or it goes back to kick me out. All right, so that's what I normally used to do. So you can see that when this trade broke this structure here, there is a POI here, and there's a liquidity feeding to that POI. I would have, had it been I was in the market, I would have taken this trade. And this is what they call mitigation. All right, this is what they call mitigation. You can see this market mitigated here, this one came here and mitigated here, and this particular POI, there's a liquidity feeding into it. Had it been I was in the market yesterday, I would have taken this trade too, and this trade would have easily given us another 10 hour as usual. That's 10 hour. So I want to make sure that this video is as short as possible. So this was the trade I took during the London section. So this is another trade I took during the New York section. All right, this is the trade I took during the New York session. So guys, as you can see now, please kindly subscribe to my channel. While we are doing this video, kindly click the subscribe button. Please guys, kindly subscribe to my channel. All right, take your boy to 1K subscribers. So this is the take. You can see that the New York session started here. All right, there's something that the market mitigated here. All right, so look at what happened yesterday. I know some of you guys don't know about this. So there's something they call support and resistance point of interest. There's something they call support and resistance point of interest. Support and resistance point of interest is where support is testing and resistance is testing it. Do you understand? There's always a reaction when it gets there. So what do I mean? Look at what happened during New York session yesterday. Let me show you what happened. Look at this POI. This is a demand, but it failed. This demand failed, right? Remember, we are coming from this 30-minute POI during the London section. So this demand here failed. The market was not able to pull back properly when it got to this demand yesterday. So it now broke this demand. That is to show you that the market is still on a downtrend. That is why it's no good. On a normal day, I don't like taking counter trend unless the counter trend is to move to another POI. Once like this one now, like it have broken structure. You know, each time the market broke structure, what normally happens is that it used to pull back and continue. It broke another structure, it will pull back and continue, just like this one, just like this one. And now check here, when this market tested this place, I was looking at, I said, what is happening? And now I looked at, I see that this demand zone failed. All right, so and the market was still testing it, but that wasn't why I took a trade there yesterday. I told myself, okay, it is not good to predict the market. You only react to the market, you don't predict it. All right, because when you are trying to predict the market, you will not take the right trade and you will always miss a trade. Look at what happened. Had it been I waited for this trade since the market have broken this structure to come back to this particular POI, I wouldn't have taken this trade during the London section. All right, so what did I do? When the market was here and I was still in the market, I went down to 5 minutes to know if I can see something that will make me to take that trade. All right. So I went down to 5 minutes. I still cannot see a proper stuff that can make me to take this trade. So I went down to 1 minute. And there was something clear. Alright. There was something clear. I told you guys. What did I tell you guys? When this market got to this 15 minutes support and resistance POI, there was a change of structure. Look at it. Change of structure. I didn't take from this POI. I said no, because there was no liquidity feeding into this place. It still now further broke this place and went down. Why did I take this place? Somebody should answer this question. Look at it. There was a change of structure. There was a liquidity feeding into this POI. I told you guys about, if you have been following my video on this trade recap series, you know that I told you that before I take any trade and only define 1 minute POI, I always look out for a liquidity feeding into that POI. And there's an inducement. This is an inducement before this POI. This is to further confirm that this POI is going to play out. All right. All right, guys. So once you just see this thing, you set up your trade and leave it. Either it plays out or it kicks you out. This particular skill is not something you try to romance. It's either it plays out or it doesn't play out. Once you meet your trading plan, set your trade and let it run. So I set up my trade yesterday. Immediately I saw this whole thing. Liquidity feeding into the POI. There was a change of structure, and there was an inducement before the POI. I said this trade was going to play out. So what did I do? I set up my trade and leave it. Do you understand? And look at what happened, my people. And just to further confirm, this trade actually played out during New York section. Look at where New York section started. Look at when the market entered here. All right. So I set up this trade and left the market. And I was able to catch my 10R. Had it been I was in the market, just like what I told you guys, I said once I set up my trade, I don't used to be in the market to be watching it. No. This was where I broke even. I set up this trade, left the market. Had it been I was in the market, I would have taken this, stacked this trade. I was taking this continuation trade. I would have stacked the trade here, I would have taken like more than 2 entry here. But that is not what I do, because I don't like sitting on the market, looking at the charts, going up and down. All right. So for my own mental health, I set the trade up, left the market, and it played out nicely. So I was able to take this 3 trade yesterday, and the whole 3 trade followed my plan, which is change of structure, liquidity inducement, growth trend, the counter trend I took yesterday. I told you guys why I took it. So guys, this was the 2 trade I took yesterday. The 3 trade I took yesterday, I had 1 break even and 3 win. So that was it, guys. I hope you enjoyed this video. The only advice I'm going to give to you guys for today's video is that just take some time, backtest your strategy properly. Once you have backtested it to the extent that you start seeing confidence, once you have that confidence, do not be afraid to take trades when you see a good trade. And another thing I want to tell you guys today is, please don't always go to the 1 minute time frame and be sitting there. No. Do your top-down analysis. It's very important. Once you do your top-down analysis for the day, the next thing you do is set your alarm. Once the market gets to your POI, trade from there. All right? Trade from there. And don't try to sit in the market all day. That is one of the reasons why people take unnecessary trade. just set your POI. It's either it gets to your POI or it does not get to your POI. Alright, so follow your trade. Once you've mastered your trading plan, follow it religiously. Execute. Just like the way man Douglas will always say, he say backtest, master your strategy, and execute flawlessly. So this is all I have for you today, guys, and I wish you a wonderful weekend. Don't forget to subscribe to my channel and share this video to your friends if you like the video, and do have a lovely weekend. Bye bye.